Good evening, everyone. Time for another silver update. This is the 4-hour chart of silver provided by netdania.com. You can click on the link below. We're actually live tonight. If we go into the 1-minute chart, you can see that we had a little gap open, came down, filled it in, and now we're rallying a little bit. But back to the 4-hour chart. I've drawn in a number of trend lines on this primary downtrend that we have right now. Also drawn in some trend lines on the last downtrend. Both of these came very close to $26. Actually, the most recent one bottomed at about $26.77. So this one was lower here, but drew these trend lines just to give you an idea of how the rally was confirmed and how that might be the case here. So the past one, and you can see that it ran from about 26 to 37.50, so almost a $12 run, significant run. But you can see the first trend line broken, not major, but the first line that was broken came right after the $26 was reached. This one just came right up through it immediately, then bounced back to this support area in here and then took off. Then your next level is from this trend line here, broke through, and you can see significant rally up to the next trend line, then a correction, and then through it. So this series of trend lines were taken out over a space of about the following month. That was it. The low was in late December. Now you can see that the old high right here at about 35.6, that was actually where we got the reversal, because we broke out through it, came back down, failed, and then we went on the current downtrend that we're on. So with the current trend lines, we're looking at about 28.50 now, maybe 28.75. If we get through that price, ignore this trend line here. I'll get rid of that one. But the first line is going to be at about 28.75. If we can get through that, then we're going to move to the next one, and that's at about 29.25, and then the next one's going to be about 30.50. So that will be a move that would correspond roughly to what we did back on the last time we rallied from 26. I can't seem to get the line to work here. So those are just some numbers to give you some idea what we're looking at to try to get a rally going. This one is a little bit different because you can see it seems to have a double bottom there, and this one didn't. If we pull back a little bit further, there's also a third test all the way back of 26, and you can see that one, once that one cleanly broke. Well, my lines aren't going here. Let's do a freehand. You can see once that broke, this line pretty much took off, and there really weren't too many other lines. Kind of similar to this one here. So actually, that's the one I already drew. This is the first 26 test right here, and you can see that it was so steep that there really isn't even a trend line that you can draw. This was the September smackdown, and you can see this was just absolutely off a cliff. We went straight from $41 all the way to 26, which was just an absolutely incredible drop. The only thing that was even comparable recently was the May smackdown. So there really weren't even any trend lines to be drawn with that one. So we were looking like we're putting in a kind of a double bottom pattern here. We'll just have to wait and see where we go. Let's go over to the question of the day, and that comes from Ivan. And Ivan asks, "Hey John, I was watching Paul Krugman on RT. This guy is teaching in different universities. He's also a Nobel Prize winner, and his cure for our economy is when consumers stop spending, then the government needs to step in and spend for them. Also, he was saying that the inflation/printing money is a good thing because it will wipe out all the debts through inflation. So my question to you, is our system to blame the Keynesian mind, and have they got anything right in your opinion? I guess it was, the question is, can we blame the current system that we have on the Keynesian mind? And I think we can. I think we can blame it on Keynesianism. And do I think they have anything right? No, I don't think they have anything right at all. And I think they're actually responsible for the terrible fiscal situation that we find ourselves in. Now, first of all, as far as Keynesianism, in my opinion, it shouldn't even be an option. And the reason why it shouldn't be an option, in my opinion, is because I don't think any governments anywhere should be able to borrow money. I think that governments should only operate through current revenues, and when the revenues, they're unable to raise those revenues, either through raising taxes because they're unpopular or the economy slows down, they have to slow down. And so if private businesses have to lay off, government has to lay off. So I don't even agree with the premise to begin with. But of course, that horse is way out of the barn. We have governments that do borrow and spend. And so the question is, the original Keynesian premise was that when things slowed down, then they could be smoothed out by the government picking up the slack and spending, and then of course when things sped back up again, then the government could slow down its spending and repay those debts. Of course, in practice, it never happens because politicians can't be trusted, and what they do is they just continue spending whether times are good or whether times are bad. You can see that with the pension crisis that we have. When the economy was great, they cut back on their contribution to pensions because the market was doing so good. And then when the economy got bad, they didn't up them. So there's no way that you can trust politicians to come through and follow through in any responsible manner. And of course, Keynesianism is premised upon the responsibility of politicians. So that's another reason that it's a complete failure and could never work, and never has. And then the other point is that whenever government spends money, a dollar spent by government is not equal to a dollar spent in the private sector. Government spending tends to be inefficient, misallocations of capital, cronyism, corruption, all those things come into play when you have government spending a dollar. So yes, there are some jobs created, but many of those are either make work useless jobs, they create stuff that isn't needed, or they don't create anything at all. They're just digging a hole and filling it up. So no, it's not preferable to have the government spend in a downturn. What would be preferable in a downturn is to have government shrink along with private businesses, let the bad debts be washed out, and let the system reset itself, and then of course you would be set up for a boom at that point. So the answer is 100% no. Keynesianism is an utter failure. It's a moronic idea. It's never worked. It never will work. And it should be, and Paul Krugman and people like him should be booed off the stage, and they should be hounded from the universities for their utter failure, because they're just absolutely contemptible people who never admit that they're wrong. And of course, we all know that they're just mouthpieces for the establishment and the government and the media. So Keynesianism, an utter failure. Now, the topic of the night, I'm not going to go into some long-winded topic. I just wanted to take a look real quick at junk silver because I noticed something when I was over on Tulving tonight. But the first thing I want to take you to is my silver update called back from January 28th, called Junk Silver 2. I was looking for the figures and I just remembered that I'd compiled them. So if you go back to that video, there's a chart that I have compiled that I list on my blog, and you can see the totals here. And there's some other articles that I cover on that video, and I'll link it down below, that talk about the two main numbers I'm looking for is how much junk silver was produced, and this chart gives the totals, and then also how much was probably melted. From the chart here, you get about 3 billion ounces total of U.S. silver, but that includes the America the Beautiful and the Silver Eagles. So you subtract out about that 300 million ounces, it gives you about 2.7 billion ounces. Now, if you've seen the most recent Silver Bullet, Silver Shield, Chris Dewayne video, he gives a quote from President Johnson when he is telling people that the silver will never be hoarded, and that essentially that Gresham's law isn't going to come into play because he expects that silver based coinage, and then the clad coinage, of course remember they did 40%, and then the just the zinc copper coinage would trade side by side, and that there wouldn't be any hoarding of it. And of course he was dead wrong, and I know from personal experience, my parents, they culled out as many silver coins as they could between the period of 1964, roughly 1970-71, when there wasn't any more being produced, and they socked away quite a bit of silver, and of course so did everyone else. So President Johnson was dead wrong, and he just got egg all over his face on that one. And of course it's ridiculous because Gresham's law is a law, and if people know that there's money out there circulating and it has the same face value but the intrinsic value is much, much different, then of course they're going to save the good money and they're going to spend the bad money. And that's exactly what happened. So but if you want to get the figures there, we're going to go with a couple of figures. We're going to go with 2.7 billion ounces for the junk, and then we're going to go and if you want to get into the melt issue, it's covered in this video, so go ahead and watch that. But we're going to go with the figure of 75% melted. So with that 2.7 billion, then with 75% melted, we're only going to get about a quarter of that, so we're going to end up with about 700 million ounces of the junk left. So that brings me back to the Tulving site that I initially went to. What's interesting about Tulving is he moves quite a bit of silver. I don't know if he moves more than APMEX, certainly his lots are larger, but what I've noticed for the last 4 weeks or so, 3 or 4 weeks, is that he has been completely out of junk silver. He's been out of the 40% bags. He's been out of the 90% bags, his choice. He's been out of the 90% half, and he's been out of the walking lib bag. So he's pretty much out of all junk silver. And so I wanted to go and check it on some of the other sites. The first one I went to, of course, is APMEX, and you can see you do a rough total, and I think I totaled up, yeah, I totaled them all up. So your first is your 1,000 face bag, and that's, you can see that's 21,000. So they've got about 200 and let's say $220,000 there, and then you got another 140 there, so there's $360,000, and then you got another 80,000, so 460,000, and then 3,000 times, we'll just say $450,000. So they've got about $450,000 worth of junk silver there, or the way that translates, there's 715 ounces in every one of those bags. So you do the math. But the figure that we had was 700 million ounces outstanding. Now the question is going to be, will at some point this junk silver just simply become so rare that it won't it won't be turned in anymore, and the premium will have to start to rise on it. Now, if you follow junk silver, you know that sometimes junk silver trades below spot. Sometimes it trades at spot. I know Tolving recently has been at spot. And if we pull up our handy calculator here, we take the current Bankwire price here on APMEX, and we do 21,070 and divide that by the 715 ounces. We get about $29.46. And if we look over here at our current price, we're at about $28.53. So that's almost $1 over spot at APMEX. So Tolving is out. APMEX is $1 over spot. Over here at Provident Metals, you get a little bit cheaper price. I couldn't find out how many bags were available, but you can see 20,949. Not that much cheaper. The cheapest is over here at Gainesville. With a Bankwire, you can get it 28.76. Still, that's going to be, if we do 28.76, it's going to be close to what we had divided by 715 in those bags. So you're looking at $29.20 an ounce. So $29.20 an ounce is about 70 cents or so above spot. That's the highest premium I've ever seen junk trade at, and that means that with this extended period, at least relative to these other periods where we have a very short time here, even below 28.50. Really, it was only a day, so not a lot of time to get anything. Over here, you've got just a few days here below 28.50 and right back up. Here we've got a significantly larger amount of time. Not a lot larger, but a significantly larger amount of time under that price. And what are we seeing? We're seeing the junk silver start to disappear and the premium start to build. I don't think the price is going to stay down here, but if the price did stay down here, I think that we'd probably see all of the junk silver available run out, and then that premium on junk silver would really start to build. We'll just have to watch it and see what happens, so we'll keep a close eye on it, and we'll talk to you next time.